Hey everyone, in December we got some huge news for NIO stock investors coming out of NIO management that could have big implications for the stock price, not only for the rest of 2023, but in 2024 as well. NIO gave an update on its lineup, on competition, on pricing, on profitability, and more. And so what I've done is I've dug through their recent information outflow and figured out which items are the biggest things to pay attention to for NIO stock investors, and I've put it together in this video here. So without further ado, let's start digging into all of this big information from NIO.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Okay, so on December 5th, NIO CEO William Lee said that NIO delivered a total of 55,400 premium smart electric vehicles. That was up 75.4% year over year. That's excellent growth for the quarter for NIO, considering that the EV market had been slowing down in the most recent quarter, considering all of the competition that went on in the quarter with price cutting, higher interest rates, slowing economic activity, etc., etc. So for NIO to deliver this kind of growth in an otherwise challenging quarter was impressive to be sure. The CEO saying that the company has over 45% market share in the market in China of RMB 300,000 or more. So a little bit of the premium priced market. NIO has nearly half of market share in that area. They rank number one there in market share. So that's good news for NIO stock investors as well. In September, NIO launched and delivered the all-new EC6, a mid-sized coupe SUV that was upgraded to the second generation. This is a nice looking car. I am a fan of SUV coupes, and this one in specific looks really nice, and I wouldn't be surprised if this vehicle helps fuel sales for the fourth quarter and beyond going into 2024. However, it wasn't all good news for NIO. NIO saying that in the fourth quarter, as price war deepens and competition gets tougher for smart electric vehicles, NIO so far has delivered 32,000 vehicles in October and November. Remember, the CEO is talking about the fourth quarter now. This is the quarter that's not yet been completed. Hasn't been completed yet. The fourth quarter for NIO is October, November, and December. But the CEO is giving you an update so far what they've done in October and November. So sales are up 32.2% from last year. That's a big slowdown from the third quarter when sales were up 75%. So nearly halving of the growth rate. A growth rate of 32% is great. Don't underestimate that. But it's a big slowdown from the 75% rate. Here's a key here. It's because they maintain their prices stable. They maintain their prices stable. So they didn't participate in the price cutting war that's been happening in China and in other parts of the world as well, as Tesla really initiated a price war by cutting prices on its EVs worldwide. And NIO said, you know what? We're not going to participate in this price cutting war to the bottom. We're just going to keep our prices stable. We're going to allow our cars to sell themselves. And even if that means slower growth, we're okay with that. We'll rather take slower growth than selling our vehicles at lower profit margins or at negative profit margins. And as an investor, I would be happy with this strategy. I wouldn't want NIO taking the race to the bottom, trying to sell as many units as possible while absorbing losses, even greater losses on the bottom line. The company's already losing money on the bottom line. So I like this strategy. And the CEO saying that in the fourth quarter, they expect to deliver 48,000 cars at the midpoint. And so far, they're on pace, right? 32,000, and they gave in even greater detail. They did about 16,000 in October and 16,000 in November. So they have 32,000 so far, and they're expecting another 16,000 for December. So you can reasonably expect them to complete that goal and hit 48,000 in the fourth quarter. But NIO believes that the power of its second generation products, which it just launched in the between the second and third quarter of this year. They believe that the second generation that they launched between Q2 and Q3, that'll be fully unleashed next year. So they haven't yet realized the full benefits of that product revamp. They've hired a greater number of salespeople to expand their sales force to help drive sales of their next gen products. And management is saying, like, next year, that's when we're really going to capitalize on these new models. Impressively, the company's vehicle margin came in at 11% in the third quarter, and management suggested that it could go even higher in the fourth quarter. Double-digit vehicle margins are solid. That means on each car they sell, they're making 11% incremental margin on each one of those cars. Now, that number needs to go higher in order for them to make money on the bottom line, or they need to produce greater number of units at that same margin to make progress on the bottom line. Either higher margins per vehicle or more units sold at the current margin to make up for all of the other costs that the company has, like corporate headquarters, paying management, paying salaries, commissions, and all of that goes into an overall company's profit, and not just each unit sale of a car, right? There's fewer costs that go into each incremental unit sale of a car, and then you have your corporate overhead, corporate costs that need to be eclipsed before you hit profitability on the bottom line. NIO is also investing in assisted and intelligent driving, right? Driverless car technology. NIO has been quickly iterating the system capabilities. I wouldn't be surprised if the full self-driving technology or driverless car technology gets rolled out in China before it gets rolled out in the United States, simply for the fact of regulatory and legislative reasons. The US is typically slow in developing legislation, new technology. We've already seen the difficulties when GM's Cruise segment had some difficulties, some crashes on the roads. They had to pull out all of their cars from the roads, and it's been difficult getting approval to operate in cities statewide in the US. So I wouldn't be surprised, given the government structure and the power structure in China, if that technology rolls out over there sooner than it does in the US. I could be wrong, but it's just a hunch that I have, that given the way politics are in the US versus China, I wouldn't be surprised if China gets this technology out even before the US. Even if the US is ahead of China, even if US EV companies are ahead in the technology compared to Chinese EV companies, just the legislative reasons, for political reasons, I think the Chinese market will have driverless cars sooner than in the US. Also, NIO said that in November, the Power Swap pilot for highway beta was released in China. So far, 29 Power Swap stations on highway already support this feature. Of course, NIO has been famous for the battery swap technology. You don't have to wait to charge your battery. You can swap your battery for a battery that's already charged. That makes it faster for you to get back on the road. You don't have to wait to fully charge your battery, which has been the main sticking point between customers not wanting to switch to electric vehicles. So far, NIO has 458 NIO houses, NIO Space, and pop-up stores in 152 cities, as well as 314 service centers, 62 delivery centers in 217 cities. This is the infrastructure that newly launched EV companies do not have, and they need to build out, right? Specifically, the service centers. The service centers and the charging stations or the swapping stations is going to be key to drive demand for their vehicles. The more service centers, the more battery swapping stations are available, the more it'll entice customers to want to buy one of NIO's vehicles, because they'll feel confident that if there's a problem, they've got a service center they can take their car to and get the repair done relatively quickly. And the same with battery swapping. Speaking of battery swapping, they've installed 2,200 26 battery swap stations, over 9,400 power chargers, and over 11,000 destination chargers worldwide. If the company wants to grow and 2, 3, 4, 5x its units sold, it really needs to expand these statistics by a magnitude of 3 or 4 or more if it really wants to ramp up production and sales of its vehicles. So battery swapping systems offer 32 million convenient, efficient, and safe battery swaps to new users, making battery swap the most trusted and popular recharging solution. That's not surprising. So much faster, so much more convenient. It's not surprising that consumers prefer that option. And so that's why I said they really need to ramp up the availability of this service if they want to boost demand for NIO vehicles. Well, NIO vehicles, the demand could increase without that, but by investing in this battery swapping station technology and making it more available in more cities and more locations, that could be one way to increase demand for NIO vehicles. All right, so there you have it. Some big news from NIO management talking about their prospects going forward and the demand for their vehicles. A strategy decision, right? A big strategy decision to not participate in the price cutting war that's happening right now. That's going to be key. And then giving you an update and telling you that, hey, these new vehicles that we launched this year, they're really going to power our sales next year. So some big news, some good news for NIO stock investors. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.